What if you could fund a retirement plan on just $1 a day? The problem is, a majority of Americans do not set aside anything when it comes to retirement. When it comes to retirement planning, a lot of people miss the boat. But when it comes to $1 a day, it is really looking at the long run, starting at an early age, and really being impressed with the sizable returns that you can get on the $1. This is not going to make you a millionaire by any means, but you can set aside a chunk of money for the retirement fund. In today's video, we're going to be looking at two different accounts. One is our high yield savings account, and the second one is the S&P 500, which is my absolute favorite ETF to go ahead and invest in. So starting with our first one, high yield savings account. This is the easiest way to save that $1. You can automate it. You can move $1 from a checking account to a high yield savings account on a daily basis, completely automated. That means in the course of a year, you're not going to miss any contributions. You're not going to be short. That $1 is always going to move over. Now, when you start thinking of this in comparison to your traditional financial institutions, looking at the brick and mortar banks, according to the Fed, the average interest rate in savings accounts was a 0.46 as of September of 2024. When you think of inflation, the banks and the brick and mortar bank accounts are paying you less than 0.5% to keep your money there. With the recent cuts that we've seen from the Fed, some of those are paying even less, which is kind of incredible to think that they are giving you nothing to keep your money in there. And that is why the high yield savings accounts do make a big difference. Now, down below, I have a link for M1 Finance. That is where I do keep all of the money in my high yield savings account. That is also where I do my investment in the VOO if you're interested in signing up for that. So looking at to invest $1 a day with that 5% from M1, over 1 year, you're putting $365 in there. It will grow in the course of the year to $374. So you're making a little bit of money, not really game changing. But when you think of the same investment at a brick and mortar place, looking at a financial institution, you'd have made 84 cents instead of about $10. That's a pretty big difference. Now, when you start looking at a bigger time frame, so thinking of your 10-year, at this point, you'd put in $3,650. That would have grown into $4,700 just for the rounding. Now, when you think of 40 years, again, stretching it out at a much, much bigger pace, that 40 years would give you $14,600 invested. That would grow into $46,000 at $1 a day. $1 a day over 40 years, you can see out of the $14,000 invested, you're doing $46,000. With the traditional, you'd have about $16K or have about a $30,000 shortfall if you put it into traditional brick and mortar versus having it in that high yield account. That is a $30,000 shortfall that you see with that exact same investment. Now, this is where it gets interesting. Getting into the stock market, so thinking of the S&P 500, where if you're getting a 5% return in that high yield savings, the S&P 500 yields about a 10% return. When you start looking at this, and the big difference between these is high yield savings accounts, this is going to be short-term money. When you're saving in there, it is going to be your emergency fund. It is going to be something that you have to keep liquid that you know you're going to have in probably the next 2 to 3 years that you're going to be using. Now, when you think of wealth generation and building long-term wealth, this is where it gets building over a course of a lifetime. When we look at that 40-year time frame, stock market is the only place that you should be investing. Sort of, starting your own business, doing real estate. The stock market has created millionaires and will continue to create millionaires. It is the biggest wealth generation tool that we have in the world, is investing in the stock market. Now, when you start thinking of the S&P 500 specifically, I invest in the Vanguard VOO, the S&P 500 index. It has never lost money in any 20-year rolling average and has seen about a 10% return. So in comparison to that high yield savings account, you're getting a double-digit return, that 10%, or doubling up the return that you're getting on that high yield savings. Now, the interesting point is when you get to 40 years, thinking of in comparison, so the 40 years was about $46,000 if you're going for your traditional high yield savings account. Looking in this account with the effects of compounding interest, investing that exact same $14,600 over that 40-year time frame gives you $196,000 by just investing the extended amount of time, $1 every single day. Now, breaking this down, looking at $196,000, that is more than we see in an average of people who are in their 30s, 40s, 50s, 60s, even retirement age, even 70s during retirement, have for an average balance in the United States, $196K just on $1 a day. And of course, $1 a day, not going to be a game changer for a majority of us if you set aside that money. Now, how can you build this even more? So you don't want just to be sitting on that 200K. Let's say you're looking at $1 million. You want to grow this up to $1 million, taking that 196K. And of course, most people can be very happy with this because you're well above the average that we're seeing in the United States. But of course, this is only $1 a day, 30 days a month. So of course, $30 a month. Now, if you look at that same 40-year window, instead of reaching and doing $1 a day, if you put it to $159 a month, so literally kind of 5xing what you're putting in there. So when you start breaking in this and breaking the 40-year window, that's just a bit over $1,900 a year. So even thinking little over $5 a day. So instead of putting $1, you're putting just north of $5 a day. That will give you just north of $1 million in 40 years. So again, $1 a day really does add up. When you start looking at $5 a day over that same 40-year window, you're looking for north of $1 million. That is based on the 10% average return of that S&P 500. And even if you keep it in the high yield savings account, you're still going to be really kind of crazy, because when you look at in comparison of those 40 years in a high yield savings account, you need to set aside $655 a month using the same equation with the compounding interest for the 40 years to reach that same $1 million, which again is kind of crazy when the investing option is $159 per month. When you start looking at the high yield savings account, $655 per month just to reach that exact same point of the $1 million towards retirement. It is an absolute game changer when you start thinking of the multiplication factor compounded over that 40-year time frame. Now, of course, when it comes to investing, when you look at that S&P 500 versus putting your money in that high yield savings account, investing carries a risk. There's no guaranteed for returns. There's nothing to say that the S&P 500 is going to, increase and actually provide that return in the future. But when you start looking and any rare year, when you start looking and really panning out to a 5-year, 10-year, 20-year, 10% is the average that we're seeing. Now, of course, when you look at the high yield savings account, they're protected by the FDIC. They do have insurance in there that is going to, but of course it can fluctuate. The rates can fluctuate. This is all just kind of hypothetical thinking of what you're putting in there. Now, for a majority of people, and again, thinking of that 40-year window, if you're putting $159 a month, break it down to a paycheck. So when you think of that $159, let's say you're even putting $79, I would say around $79 per paycheck. That is pretty low when it comes to retirement. Even then, if you think about like a 4 to 6% match, where if you're putting in $50, let's say they're matching that $50 you're putting in there, that gives you $200 a paycheck. That is investing $400 a month. Guys, you're going to have $1 million very, very quick. When you think again of the 40-year time frame, you're going to be essentially cutting that time frame a lot lower to hit that $1 million mark that we're looking for. And again, the higher and the better that you can invest. When you start getting to the point of eliminating debt, it is going to give you the power to invest. But even if you're looking at one single dollar a day, you can still almost reach that $1 million status. You would just have to invest in a little bit of a longer time frame. But when we get up to that $5 a day, you can be a millionaire in that 40-year window just putting money into the S&P 500. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think about investing $1 a day and investing that $5 a day to make that $1 million mark over that 40-year period. And I'll catch you in the next video.